Well, a very good evening and thank you for joining us on India Business Hour. My name is Ashwit Kumar. Let's go across to Shireen Bhan now for the top stories of the day.
Well, straight to the action on Dalal Street, where equities continued their up move for the 7th consecutive session, ending at 3-month highs. The Nifty ended with gains of 0.5%, and the index is now at a kissing distance of 11,000. The Sensex rallied about 0.2%, and the bank saw an up move of about 0.5%, while the mid-caps outperformed today, ending with gains of more than 1%. So that was the story across the equity markets. But let's head out to the currency market, where the rupee ended the day almost unchanged at 70.40 against the dollar. That was the story for the rupee. But the top story this evening, and this is a cnbc TV 18 exclusive. We told you first, it is now official. The centre is set to infuse an additional 40,000 crore rupees in public sector banks during the current fiscal. The government is planning to do so through recapitalisation bonds, and it is expected to speak the Parliament's nod for this plan as early as tomorrow. Sapna Das, who broke that story, joins us now with more. Sapna, what are the details coming in on the recapitalisation bonds?
Well, we're clearly given to understand that the government will be seeking the Parliament's nod sometime as early as this week in terms of additional recapitalization bonds for public sector banks, and this is basically being done to meet the regulatory capital, of course, that requirement, as well as growth capital also possibly. So 40,000 crores is the number that is being, that we understand maybe the amount that the government will like to infuse into these banks via these recap bonds. Possibly the supplementary demand for grants could be as early as Thursday or even Friday. So that's a format for the government to actually seek the Parliament's nod for any additional expenditure. Having said that, this will now push the overall envelope in terms of recapitalization for PSBs in FY19 to as high as 1.05 lakh crores. Because in the current budget, in the existing budget for FY19, 65,000 crores is what the recap amount was, out of which 42,000 crores still remains. So that fund infusion is expected to maybe conclude by end of this calendar or early 2019. And in addition to that, you will have this 40,000 crores also coming in. Now, in terms of which are the banks which will get how much and all that, possibly is going to be decided later.
I wait for the supplementary that's coming up tomorrow. But I have said yes, most probably tomorrow. Yeah. Okay. Right.
On that panel that has to be found on that capital framework, has anything moved on that?
Yeah, a lot of movement. It is virtually been agreed. Last touches. Hopefully soon it will be announced.
So watch out for that. We'll be tracking that story. Now, the NITI Aayog has released a report titled Strategy for New India at 75. The report sets the goal for economic growth across various sectors for the country in the 75th year of independence. Here are the key highlights. The strategy outlines an average growth rate of 8% till 2022 and hopes to make India a $4 trillion economy. The report also sets out some ambitious macroeconomic targets to put India on the high growth path. Gross fixed capital formation, which is a measure of the investment rate, is currently at 29% of GDP. The report expects this to hit 36% in 5 years. India currently exports just under $500 billion worth of goods and services. The report expects this to hit $800 billion. The tax to GDP ratio currently at 17%. The report expects this to touch at least 22%. It also lays out ways in which income from the agriculture sector can be doubled in the next 5 years, from increasing irrigation coverage to hybrid seeds to public-private partnerships. It spells out various steps to boost agri-productivity. Here's the NITI Aayog Vice Chairman Rajiv Kumar on the new strategy report.
It's not a conservative approach at all, I think, because we're talking about an average of 8% over the next 5 years. And, as for example, and this year is included in that, and you'll get about 7 and a bit in this year. And so therefore, growth in the terminal year would have to rise towards double digit to get you an average of 8.
Going by the current distress in the farm sector, how realistic do you think will be to aspire for such a level? And secondly, what sustainable measures can we see as far as intervention on the farm sector? Loan waiver, as many economists like you agree, is not a sustainable solution.
This is why the strategy talk about creating agripreneurs. And I think that's a very important word. And I hope the importance is not missed, because that implies the creation of agro-processing industry at a much faster pace than what you have had so far. And the value addition in agriculture, and with the farmer participating in it, like for example in some cases the FPO etc. In some FPOs has been done, is the way forward for farmers' income to double, not through raising agricultural output. That's one part of it. The second part of it is of course that you want to reduce the costs of production. Because you know the cycle of rising costs and rising MSPs and you know therefore rising indebtedness very often is also not the way forward. So this is why, if you notice, we have been a little bold in saying that we will look at zero budget natural farming in a very systematic way.
Mr. Gulati, thanks very much for joining us here on CNBC TV 18. You've, of course, been studying the agrarian economy for decades now, sir. So let me start by asking you about this aspiration and stated objective of the government of doubling farmers' income by 2022. Do you believe that it is time now for us to stop talking about this target and this aspiration, because we are nowhere close to being able to achieve it? Should we instead look at more realistic targets in the short term and focus on achieving those?
You know, frankly, if I tell you that overall GDP growth in the economy I'm going to raise from 7 or 8% today to 20% tomorrow for the next 5 years, what would you say? How would you react to that? Isn't it almost impossible, absurd to keep this type of a target? So to me, frankly, this doubling of farm income in real terms by 22, 23 looks more as a cruel joke with the farmers. And this is what will boomerang. This is where they, you know, promise the moon and then they can't give even, you know, 1/3 of that promise. So I think you have to be very realistic. In fact, the problem is the rate of growth in real incomes has fallen during the BJP period compared to what it was happening during the UPA period. So that is the cause of distress. Now, earlier, you know, the trend is 3.6% per annum. The real incomes increased between 2003 to 15-16. If you can give even that or a little higher, 4%, 5%, it will be only by 2030 you will be able to double the farmer's income, not by 22, 23. So I think we have to come to the ground, the realities that we have, and not get lost into all and created unnecessarily in the country.
Okay, so you're saying we need to focus on the ground reality. The ground reality as of today, Mr. Gulati, is that we have 3 states that have announced the decision to go in for farm loan waivers. This on the back of several states that had announced it earlier as well. Now, forget the issue of it will impact the credit culture and moral hazard and so on and so forth. The fact of the matter is that something is broken in the agrarian economy today. And while farm loan waivers may not be the sustainable solution, what can be the intervention in the interim?
You know, we were looking at the commercial banks' outstanding loan data to agriculture. The September 2018 figure is 10.5 lakh crores. Now, this is only the scheduled commercial banks. On top of that, add the primary agriculture credit societies and the regional rural banks, 14 lakh crores. Now, if you want to do that entire, loan waiver, it's unbearable in the economy. So they will put all sorts of restrictions. It's a bait for getting votes, nothing else.
Mr. Gulati, I want to very quickly also ask you about some of the specific recommendations that the NITI Aayog has put forward in the Way Forward report for Agri. And a lot of conversation, a lot of talk around this value addition and the value chain infrastatus for Agri value chain, set up village-level procurement centers, focusing on the food processing industry. I mean, all of these are stated objectives. These have been stated promises that have been made. What is coming in the way of India not being able to achieve its true potential when it comes to value-added agrarian economy?
You first need a very strong minister who can carry the ball and score the goal. That's number one. You need a champion to do it. It is not the prime minister which will do everything. So that's number one. Number two, you need to carry out agri-marketing reforms, which is a state subject. So this champion minister has to coordinate with the states the way we did GST reforms. That's the way agriculture marketing reforms have to be done. So once this is cleaned up, then you have to get the investments in place to make those value chains. I mean, all these ideas are good, and there is nothing new in these ideas. We have been writing for the last 5-7 years on this. So question is, who is going to do it? Who is going to implement it? So you need resources, but you need before that vision and perseverance and patience to champion that cause and implement it. Unfortunately, this government is going in such weird directions in agriculture. One wonders what is in their mind. You need access to best markets in the country and around the world, and you need access to best technologies in the world. These are the only two things to be done. Rest will follow. All these incomes and other things will be a result of this.
Ashok Gulati, agri-economist. Always a pleasure, sir. Appreciate you joining us here on CNBC TV 18. Let's take that conversation forward with Surjit Bhalla, economist and former member of the Prime Minister's Economic Advisory Council. Also with us, Kiran Kumar Vissa, farmer activist, and Piruz Kambata, Chairman and Managing Director of Rasna. Gentlemen, appreciate you joining us here on the program. You know, Mr. Bhalla, let me come to you first. A lot of people would say, people who track the agri-economy very closely, that what we've seen being put forward today by the NITI Aayog is old wine in not even such a new bottle. These recommendations have been made previously by various government committees, by the Dalwai Committee, which was set up by this government itself, which submitted its reports in 2017. And where are we on each of these stated objectives 4 years on? You know, is there some truth to what we just heard there from Ashok Gulati, that there is intent, there are tall promises, but we're failing at the execution end?
Look, I heard part of what Dr. Gulati had to say. I'm in substantial agreement. But I want to point out, I don't know why professional economists like Mr. Gulati, etc., are not coming out with the following, and something that I have stated for a long time, I'll continue to state it, and that is that there are two most corrupt systems in agriculture. The first is the PDS system, which is obviously linked to the MSP, and the second is the Agricultural Produce Marketing Act. Now, both of these, the people who benefit are in large part the politicians. There's a very easy solution to the farming problem, not that it'll take care of problems overnight, but something that I've proposed and I'll continue to propose is that, first of all, remove all constraints on farming. That is to say, they can sell to who they want, who they don't want, they can grow what they want, not grow what they want, and they can export what they want and not export what they want. Every government has intervened with the farmer. Some slightly better, some slightly worse. It's a disaster, and it is something that only benefits politicians. Second, you eliminate the APMC Act, which will automatically be eliminated. This will not necessarily solve the income problem. Farmer can still be poor, can still be deficient, can still lose a lot of money. That's where you bring in, and we have the technology for that, is direct benefit transfers to the producers. Not all producers, but watch or look at what Telangana has done. It's a very straightforward model of transferring income to farmers. At the same time, also get rid of the PDS system and transfer income to individuals.
The idea now that is being suggested by many is income support to farmers as opposed to a haphazard loan waiver. What, to your mind, is the solution? Because there is need for intervention. In the short term, what are the answers?
See, first thing, I think we should say that this whole thing has got fuel because some few industrialists who actually, robbed off the banks with lakhs of crores of rupees. So actually the talking point is that few industrialists can run away with a few lakh crores, why can't the farmers' loan be waived? But I think this whole argument is not proper. Those people have done something criminal and they are going to pay for it. That doesn't mean that the rest of the loans can be waived, because in any banking system, cannot do with a loan waiver. Second, what I have not understood is that why loan waives of everybody, because actually there must be some people who have made money also and his loans are being waived. The main problem in agriculture, I think we have to understand, we are only looking at antibiotics and medicines. We are not looking at the original problem. The original problem is the health of the person itself. Why look at medicines? In my mind, the original problem is that this UPA loan waiver also is bad, this loan waiver is also bad, all is bad, because the main problem is that we have never done like 91, we got an industrial liberalization. And there was a whole slew of reforms which changed the whole industrial face of this country, and we have changed. Agriculture, probably after the last green revolution which happened some decades back, has not seen those changes. There are small fragmented farms where technology is not being used. A person is told, here is subsidy here, we will buy it here. There is no market system where a person wants to make money. And I think it is too small and fragmented. I can't be speaking for all other experts here, but let me tell you, the big opportunity lies in actually mechanized farms and food processing. Because then you will have huge big farms and a much bigger value. Like garlic, you can sell, let us say, at 10 rupees a kilo, 30 rupees a kilo, but the garlic powder in a nice can which you can export to the world, you can sell at probably 200 rupees a bottle. And I think this whole value linking agriculture with food processing as one big thing, and having the farmer reap benefit of it.
Kiran, respond to both what you've heard from Surjit Bhalla, Ashok Gulati and Firoz Kambata, and specifically on the issue of income support versus loan waiver as being the most preferable option today.
Firstly, I just wanted to respond to the previous speaker. I definitely have to say that liberalization of the kind that he's talking about, and basically making the road much smoother for big corporates to not only get into contract farming but actually directly do the cultivation, I think is the direction that he's talking about. I think that kind of a thing will be a much bigger blow to all the small and marginal farmers in the country. We should look at agriculture as a source of livelihood to 50% of the population, and how the government can play an enabling role so that the small farmers can have a better control over the entire value chain. See, the more part of the value chain actually is in the control of farmers or the farmers' institutions, that is when the income of the farmers is going to improve. We are not talking about improving the income of Reliance Fresh or Rasna or some of the US companies which want to invest in India. I think that we have to get straight off the bat. If that is the direction that we want to go, then definitely not doubling of farmers' income, it's going to become halving of farmers' income. So that's one thing. As far as the direct benefit transfer
no, but what is the basis for that claim?
I think the direct income
Kiran, no, one second.
No, 1 minute.
What is the basis for that claim that it will actually become halving? I'll give you a chance, Firoz.
I will like to respond. I will like to respond.
What is the basis for that? I'll give you a chance, Firoz. Just 1 second. Just 1 second. What is the basis for that claim that you're actually going to see incomes being halved as opposed to yields in fact going up for farmers? Because the pilots that have happened on a small scale with the likes of specific foreign companies have actually shown an increase in yield. So if you have evidence to suggest otherwise, please do present that.
No, I'm just saying that the liberalization of the kind that he was talking about, where he's saying that I cannot grow the kind of oranges that I want to be able to, grow the exact, basically the corporate companies, the large corporates, which are bringing in the FDI, dictating every step of, from what crop is to be grown and who it is to be sold to. I'm saying that that kind of a thing actually will pass on the control of the whole agriculture sector only to the hands of a few farmers. On what basis? I think you can see the experience of all the countries in the world which have followed that model, whether it is Europe or whether it is the US and so on, only 4% of the farming of the population is actually supported in Europe in agriculture. They are involved. In US it is less than 1%.
Yeah.
I'm saying that that kind of a model, that kind of a direction is absolutely not the direction to go for India. I'm not saying that no reforms are needed. I'm saying that reforms are needed, but keep the small farmer at the center of it and then think.
Surjit Bhalla, Kiran Kumar Visa, Piroz Kambata, appreciate you joining us here to discuss the road ahead for India's agrarian economy on the back of the recommendations that have been presented today by the NITI Aayog. Well, another idea mooted to revive agriculture income is support to farmers. Here's SBI Chairman Rajneesh Kumar calling for direct income support on an annual basis instead of a loan waiver. He believes some farmers are unable to service their debt with their current income, and hence income support is perhaps the better option than a waiver. Take a look.
One, this is not a permanent solution. It has not helped in the past, it will not help in future. The fact is also that many a times the farmer's income cannot support the debt which they are taking because income is low. Then whether we focus on augmenting that income or we take the route of loan waivers.
Aitu Bandhu in Telangana is
I would consider it to be a much better option than loan waivers. It does put a certain fiscal burden on the state, but both puts.
Yes,
but
waiver also put.
The Telangana model, from bankers' perspective or from whatever way you look at it, I think it is a much better way of assisting the farmers rather than loan waivers.
Well, the ghost of the angel tax is back to haunt the startup ecosystem. Over the past few days, there have been reports of several early-stage startups receiving notices from the Income Tax Department asking them to clear outstanding dues on the angel funding received by them. Now, this despite the government's previous assurance. The Central Board of Direct Taxation had issued a circular in February assuring startups that no coercive measures would be taken to recover outstanding angel tax demands. Later on in May, the government had declared that no angel tax will be levied to up to 10 crore rupees of funding raised by a startup. So once again, for the benefit of all of our viewers, what exactly is the angel tax? It is the tax that the startup pays on the investment recovered from an external investor above its fair market valuation. Now, that's where the problem lies. How do you determine fair market valuation? Startups consider this a deterrent to the spirit of entrepreneurship. Industry leaders like Mohandas Pai, Kiran Mazumdar-Shaw, and Mahindra have already raised their objections to the tax notices issued. So joining me now on the show, three special guests. Mohandas Pai, chairman of the Manipal Global Education Services, a startup investor himself. He's also the chairman of Aaron Capital. Also with us, Srijit Muleyal, co-founder of True Elements, Abe Zachariah, co-founder and CEO of Goodbox, and Rajesh Sani, founder of GSF Accelerator and co-founder of Healthy, also with us. Gentlemen, appreciate you joining us here on the program. Mohandas Pai, this is almost deja vu. I remember that during the month of April, we had discussed this ad nauseum, the ghost of the angel tax returns to haunt the Indian startup ecosystem. What's going on?
What is going on is the Income Tax Department is out of control. They're not listening to the CBTD guidelines. They're not going by what government has promised the taxpayers. There is no concept of taxpayer service. And they've gone totally overboard. Let me give you an example. For example, a venture capital fund has been asked to come to Varanasi to explain why they invested in a company at that valuation, whereas the law clearly stipulates that any venture capital fund registered with SEBI will not be asked this question. Then some few income tax officers have taken the difference between the projection and the actual achievement and the difference between valuation and added that to income to say, you gave a projection, you didn't see the projection, you've done less, so the difference is what you have to pay as tax. And they're using coercive action to pay 20%. This is totally absurd because the government of India and Prime Minister Narendra Modi promised that there'll be ease of doing business and everything. And last year, Shirin, after
but what's the point of these promises, Mr. Pai? No, but that's my point. That's my point. We have done a sustained campaign. You were on that program. What's the point of these promises if they translate into this on the ground?
Shirin, I want to ask Prime Minister Narendra Modi as to who runs this country. Our Prime Minister runs this country. Now, the tax officers are beyond control of anybody. The Prime Minister's office, the DIPP, and everybody, Finance Ministry, asked the CB take action. CBT called some of us, we explained, and they promised to do it. Now we see all this happening on a much wider scale than last time. And assessment orders have been passed, people have been put in trouble, and it's gone beyond control. This is tax terrorism at the worst. I want to ask our finance minister publicly that he promised us tax terrorism will be brought down when he came to power in 2014. What has been done? It is 4.5 years. It's time that our representative took charge of this country and didn't allow all these people to go overboard to harass young people, harass citizens. We are suffering from tax terrorism, and this is an extreme example where circulars are not being listened to, not being obeyed. I think this is very, very serious, Shirin. It cannot go on like this.
You're right that this is serious, and we have seen assurances in the past, but clearly what we're seeing today is a return of exactly the very same issues. Let me bring in Srijit Mulyal into this conversation. Srijit, as I pointed out, we've been discussing this issue. We brought it to the attention of the authorities several months ago, and yet it returns. Do you agree with Mr. Mohandas Pai that this time around the action is far worse? In fact, to quote Mr. Pai, he says the action is far more perverse than the last time on part of the Income Tax Department.
I would completely agree with Mr. Pai because there's a huge gap between what the leadership wants and what bureaucracy is doing. Now, last year, when we were discussing the same topic, and I had an order last time. This year, I'm waiting next order for my subsequent round. But the number of orders which has been issued in the last 2-3 weeks is exponentially high. What we doubt is probably startups are an easy target for income tax officers to meet their targets, because one startup minimum they would have raised 1.5 to 2 crore in angel round, and you can issue an order of 40 lakhs. That's what has been happening. So there is no change except that there is a clarity or an alternative process which is very cumbersome, complex process of IMD approval for people who are going to raise fund. Again, that's not a solution. Because I myself have applied in IMD almost 4 months back, nothing has moved. I applied for against my order with an appeal last year, nothing has moved. So there is better clarity, but executionally there is nothing has changed since last 1 year.
Okay, you haven't seen any forward movement since the last 1 year, which is when you received your income tax notice. Rajesh Sani, let me come to you. You run the GSF Accelerator. You deal with startups as well. What is the experience that you're facing with respect to the angel tax?
Hey, Shireen, I think there are 3 key issues. One is the valuation. As Mohandas also said, I don't think income tax officers are capable of valuing any startup. In fact, that's the only valuation method that they understand or want to understand is DCF. And DCF clearly doesn't work when you want to, value a startup. Many of the startups may not even have any revenue for many years and still may be valuable. So this goes against the basic premise of how the startups are funded by angels. So that is creating a lot of friction. And then the second issue is they are targeting. I think they are systematically targeting the startups. This is both arbitrary and indiscriminate. And none of the startups has been spared.
Can we put some numbers on this? Rajesh Sani, I mean, I want for the benefit of all of our viewers, again, the point that Rajesh is making there on the discounted cash flow, the DCF method, which doesn't take into account intangibles like IP, market potential, etc. Rajesh Sani's argument is that is something that the tax department is used to, and this is not how startups are valued necessarily, and that's causing a point of friction. But do we have some data? How many income tax notices have been sent out? How many penalty notices have been sent out? Rajesh, do you have any anecdotal information as well on what is the quantum of this problem?
I think at hundreds. In fact, I have seen in my portfolio 10 to 15 companies that are dealing with these issues. And it's essentially for the companies that those were registered in 2015 and 16. So I think there's some kind of targeting of those companies. Almost every startup that was registered in that time period and has raised some money has been sent a notice. And they are now dealing with income tax officers.
Okay.
Out of 40 in one of
and what has been the response? Have you tried to... Sorry, what were you saying, Mr. Pai?
See, out of 40 startups in one of our funds, 10 have got notices this year. And some of them have been really harassed. 10 have got notices. That is 25% out of a portfolio of 40. And we got about 25 notices from other people. I mean, another 15 notices from other people who have come, who are all our friends in the system, who are asking for help. So we got about 25 particular cases of notices and some assessment orders which have been passed. Assessment orders which have been passed also we have got.
Okay, so about 25 out of your own portfolio companies have been given notices of one kind or the other. Let me go across to Abby Zachariah of Good Box as well. Abby, what exactly is the problem that you're faced with? I believe that you've been slapped with a penalty as well.
Yeah, so basically we had raised a small angel round from two very well-known entrepreneurs. I don't want to name them right now. Amounting to about 60 lakhs. So on that, we got a tax of about 24 lakhs, including the interest, etc., as we slapped on us. This is like for the recent one.
Okay.
Yeah. But we will work around on that in terms of the appeals, etc., and we may have some set of the losses to be done. But the whole process is like very cumbersome and totally uncalled for. Because if you look at the background of these investors who have put money, the source of fund comes from well-known startup exits. Okay, and we ourselves are a fully compliant company, no cash payouts, audited by Deloitte. And we have to go through this whole rigmarole because there's a bunch of guys who may be doing money laundering, right? So that is where our problem is. And now for the last 2-3 days now, it's very disturbing. And instead of looking at our business, we tend to worry about this.
Okay. All right, so that's the problem that you're faced with. But Mr. Pai, let's go back to what we should realistically now expect and what is the want or the ask from the government. You said that what was announced last time, there were 2 circulars, one from the DIPP, one from the CBDT, which basically said that there should be no coercive action. You believe that that was a quick fix, it was a short-term fix, but something more permanent is needed. Now, what is that solution that you want the government to take forward?
Well, the solution that we want the government to take forward is, if there is a valuation by a chartered accountant or a merchant banker, that valuation should be accepted. The income tax officer should not question it because he has no competence to question it because that is a valuation certificate given. That's point number 1. Point number 2, the PAN details of every investor is given in the tax returns. They ask for it. Everybody has been given. Now, they can go check up the PAN from the database because all filing is electronic and check up and see is there any person who has invested a certain amount, and if you look at his income tax record for last 3-4 years, the database, does he have the income to invest? They have a right to invest. They should do it. And only for those people where they feel that they don't have the correct income, they can send a notice to the investor to say, why don't you explain your investment? Because there's something called the AIR return for mutual funds, but they must do. But what they do is they send a notice to a startup and say, give me a list of all your investors, give me a list of all the PAN, give me their income tax return for last 3 years, give me the balance sheet for last 3 years. Now, bank statements and balance sheets and income tax return of all the investors is confidential. We are given the PAN is there in the database, let them make the search. They're not making the search. They're asking the startup to give, and they give the startup 5 days, 6 days. It's not enough to get any details. Then they say, give the thing. If we don't give it, we'll have coercive action. And there is panic. So they have, see, let us accept. They have a right to ask for source of money. That is the law. Let them ask for source of money. And the next thing is, wherever funds are invested, the law is that the valuation is done by a SEBI-registered fund. They must not ask questions. Now they're asking the funds to come and explain why this is happening. So the solution is very clear. CBT issues circulars. The law is also clear, but they're not applying the law.
Mohan Das Pai, Srijit Mulyal, Rajesh Sani, Abby Zachariah, appreciate you joining us.
India Business Hour Plus, and it seems to be raining loan waivers in the Hindi heartland. After Madhya Pradesh and Chhattisgarh, the newly elected Congress government in Rajasthan has also announced a waiver for farm loans. Rajasthan's waiver will cover short-term crop loans of up to 2 lakh rupees. This will cost the state around 18,000 crore rupees. Hear out the state's Chief Minister Ashok Gehlot making that announcement.
आज ये आदेश निकाला कि तमाम जो कोऑपरेटिव बैंक के लोन हैं उन तमाम लोन को पिछली सरकार ने जिस प्रकार से वादा खिलाफी करी है कि एक तरफ हम 50,000 तक के कर्ज माफ करेंगे और सिर्फ 2,000 करोड़ पहले चुकाया है जब ये 8,000 का भार आने वाला था उनके ऊपर, तो 6,000 करोड़ से छोड़ दिया हमारे को। तब भी हमने तमाम तय किया कि 50,000 के बजाय समस्त लोन माफ करेंगे।
Well, from politics back to corporates, India is seeing growth in passengers, but airlines are not making money. That's the word coming in from senior executive of Boeing, that's Dinesh Keskar. Talking to the media, Keskar also said that non-profitable growth is the biggest pitfall facing the Indian aviation industry. Take a look.
And I have seen interesting times, and this is what we are in right now. Because why I say that? The growth in passenger numbers, which I will show you, is again very good, but not many people are making money, or I would say almost nobody is making money right now, and that's not a good situation either. Yes, you are absolutely correct, but if we are growing at double digit, okay, and if you grow, as you showed in the chart, in 2 years in between at 20%, if you are profitable and grow at 18%, I don't think it will be a big deal for the airline. So my submission to you is, it's a two-part point I made. It's a double-digit growth coupled with losses is what I'm concerned about.
Well, there's no major change in decision-making after the exit of founders from Flipkart. That's the word coming in from CEO Kalyan Krishnamurthy. Now, remember, Kalyan has been given the additional charge of Myntra and Jabong as well. Speaking exclusively to CNBC TV 18's Priya Sheth, Krishnamurthy also speaks about the synergies with Walmart. Take a look.
Vinny continues to be on the board of Flipkart. We have the benefit of taking his advice all the time. He's available for us, he mentors us, and that doesn't change at all. So to your question, no, nothing really changes from that point of view.
So the nature of decision making still remains the same, but of course with none of the founders being around on a daily basis, what does it feel like to be the boss now?
See, that's it doesn't feel any different or anything like that. I think the foundation of Flipkart has actually been built on very humble grounds. It's a very, very deeply capable company. It's not built on just one or two people, so it doesn't feel any different for us here.
Right, 2018 has also been the year of Walmart. It's been the big deal, and you've been focused on building synergies between Walmart and Flipkart at this point in time. But as far as the integration plan is concerned, I understand approvals have come in from the CCI and the regulatory bodies. What is the kind of integration that is happening at this point in time?
There is absolutely no integration happening at this point in time, Priya. What I'll tell you is that the two businesses, if you just look at Walmart, if you look at Flipkart, have very unique strengths and capabilities, both market leaders in its own way. And the contribution to the customers from both of these platforms have been huge in the last several years. What we try to do is to learn from each other and apply it to our own businesses. If you look at sourcing, if you look at supply chain operations, there are several things for Flipkart to learn from Walmart, and we actually look forward to learning those and implementing those at Flipkart.
Well, that was Mr. Krishnamurthy in conversation with my colleague Priya Sheth. He also happened to mention that the IPO is not really on the top of his agenda as of right now. With that, let's shift focus now from one big interview to the other. From this one coming in from the auto space, Maruti Suzuki chairman R.C. Bhargava has said that the company's inventory is not in excess. Now, speaking to my colleague Parishit Luthra, R.C. Bhargava added that while various factors have affected the car sales this year, he's hopeful that Maruti Suzuki's sales will see an uptick with the new model launch in the fourth quarter. Here's an excerpt of that conversation.
As far as Maruti is concerned, the inventory level is about 4 weeks, 1 month, which is what we prescribe as the correct level. It's true, in the past couple of years, dealers have got used to much lower inventory levels. And so in that sense, they have more. But we are not 8 weeks kind of inventory. Production cuts have been made by people to adjust inventory.
What's the reason for the drop in sales as well? There have been drop in numbers for Maruti as well as the entire industry.
Overall, if I look at the year, we haven't dropped. We are still growing. We have a good growth, about 8% growth. There still exists. But that growth was largely in the first quarter. Subsequently, I think the fact that no new model was launched by us this year has been obviously a negative factor. Because in the past, growth has always been driven by new launches.
Well, it has been raising funds in India's edtech sector this week after Baiju raised $540 million earlier this week. Now, Tapa has announced a fundraise of $35 million. Now, Tapa is raising this amount from Kaizen Private Equity and its existing investors, that's 8 Roads Ventures, Helion Ventures and SAF Partners. Now, Tapa was founded in 2013 and describes itself as an after-school learning app for classes 5 to class 12 and for competitive exams as well. Now, CNBC TV 18 Saina caught up with Tapa founder and CEO Zishan Hayat and began by asking him as to what the funds could be deployed for. Take a look.
So I think overall it's a great opportunity for all of us where we are seeing money coming into education companies. On the awareness bit, I think Topper has 6 million registered users. Baiju, I think, has somewhere between 10 to 20 million registered users. And I think the total student population in India is 300 million. So both the companies are way far away from, saturating the potential that is available in the market. All of us are less than 10% penetration in terms of user base.
You have about 80% of your sales and contribution to sales actually coming from the offline engagement that you've been able to create with parents in this counseling format.
Yes.
Do you want to talk us through that a little bit? Right.
People discover products online and the download happens online. But I think for the payment to get completed, parents and families still need to build that trust with the company, especially because they are committing away from a coaching class or a tuition center to the learning app. So that commitment is a large commitment which they can't go back to, right? So before they take that decision, I think there is some amount of trust building that is required. And that is where a feet on street or a person at your home helps you make that switch.
What is the number as far as user engagement? Do you map this, track this, and what has it been for Topper?
American edtech companies will see about 9 to 10 minutes per day. Like the Coursera's, Khan Academies and Udemy's would see about 9 to 10 minutes per daily active user. Competition in India sees about 40 to 50 minutes per daily active user. Topper's engagement has been over 100 minutes, 105, 110 minutes per daily active user. So, engagement is the first thing that is necessary to build. And then you build retention. It's just not sufficient that users spend 2 hours. They need to continue using it through the year. Your monthly retention is 80% in your 12th month. These two metrics are super important.
Can you give us a sense of what your renewal rates have been or repeat customers have been?
In general, subscription products see a 40 to 60% renewal rate right now. Excellent subscription products across industries, not just education, will see like a 65 to 80% renewal. We are right now at a 55% mark.
Okay. Having raised now 35 million, give us a sense of where your revenue run rates are and where are you on the profit and loss picture?
So we are growing at almost 2 to 3x each year. So our revenue run rate is somewhere between the 150 to 200 crore mark right now. Majority of the costs are on the fixed side where we are investing in content, tech and product, right? These are all front-loaded problems. But hopefully as more and more users come use the platform and then revenue goes, the costs remain the same, but the revenues continue to increase.
Well, V. Vaidyanathan, the MD and CEO of IDFC First Bank, a result of the merger between IDFC Bank and Capital First, is betting on doubling the retail share of the business to 70%. Now, he spoke to Lata Venkatesh a day after the merger completion. Vaidyanathan told Lata that the entire stress in the IDFC Bank books has been recognized as of now. And that's not all. He also went on to add that IDFC First Bank can start with a clean slate as far as infra loans are concerned. Take a look.
When does IDFC First Bank shares start trading?
30th of December is the date when Capital First will stop trading. 31st is the record date, and about 15 days from then, stocks of IDFC Bank will be issued to shareholders of Capital First.
What about the asset side as well? I mean, are the legacy infrastructure assets cleaned up, or will we get some NPA problems there?
There is absolutely no NPA problem. The existing management has really done a good job. Almost all of it has either been sold to ARC or sold for cash or for SR, but really all of that is all done with. So we can start with a clean slate as far as the infrastructure loans are concerned.
Now, actually, it was occurring to me, Capital First comes in as an NBFC. Now, NBFC don't have the same restructuring rules that banks have. For banks, once you default, then unless you pay back the entire, all the overdues and 20% of the principal, you are not upgraded. For an NBFC, that problem is not there. Once you start repaying, again you are standard. Should we expect that from your capital first portfolio there could be NPAs because now the rules are different?
No, not at all. Because see, Capital First has a 30,000 crore loan book, or 32,000 crore just for the benefit of our viewers. And the net NPA is close to about 1.1% and gross is about 2%. The best part is there is absolutely no restructuring.
Okay.
It's pretty straight book. And I think there is absolutely no problem expected from Capital First loan book as such.
Okay.
I told you the IDFC Bank loan book is clean as well. So together, put together, it's a clean book. All accounted for, zero problems day one.
Well, it was the uncle-nephew duo of Nirav Modi and Mehul Choksi who made headlines throughout this year for an alleged scam of over 13,000 crore rupees. Now, CNBC TV 18's Utkarsh Chaturvedi and Kevin Lee report that this scam sparked off a chase that involved PSU banks, investigating agencies, political parties and multiple nations. Take a look.
From a celebrity dweller to an economic fugitive, Nirav Modi's glamorous life took a complete U-turn this year and played out like the plot of a blockbuster Bollywood movie. His partner in crime was his uncle Mehul Choksi of jewellery group Gitanjali Gems fame. The first signs that something was amiss came on the 5th of February when Punjab National Bank announced that it had reported a fraud of 264 crore rupees by Nirav Modi. The CBI registered an FIR that very day. But within a few days, the quantum of the alleged fraud had swelled to a whopping 13,000 crore rupees. And other investigative agencies like the SFIO, the Enforcement Directorate and the IT department joined the hunt. As the bank itself admitted a week later, this was a scam which had been running for several years. But then came the twist which changed the entire narrative. Even before the investigative agencies could start their work, Nirav Modi and Mehul Choksi had fled the country. Confusion ensued. Arrest warrants and red corner notices followed. The alleged scam and the resultant manhunt soon became political ammunition.
क्या हुआ, क्यों हुआ और इसके बारे में प्रधानमंत्री जी क्या करने जा रहे हैं? सुना है कि उनके ऑफिस को भी पता लगा था पहले. मोदी जी के ऑफिस को पता लगा था कि नीरव मोदी जी ने 22,000 करोड़ रुपए देश की जनता के चोरी किए हैं और कोई रिस्पांस नहीं आया. तो प्रधानमंत्री जी को देश को समझाना है.
But the investigators plowed on and a modus operandi was put together. The investigating agencies alleged that Nirav Modi and Mehul Choksi were hand in glove with Gokulnath Shetty, who was then deputy manager of PNB's Brady House branch, and a few officials from PNB and other banks. These bank officials issued LOUs to other banks in the name of Nirav Modi and Mehul Choksi without making an entry in the books of the bank. Before these LOUs expired, new LOUs were issued to honor the earlier LOUs. The amount that the ED was able to seize via assets of the accused were also underwhelming. Independent valuers put this number at 2,000 crore rupees. Seizures continue, and so far, the ED has attached assets and properties in India and abroad that all in all are valued at 4,000 crore rupees. Through it all, both Modi and Choksi maintained their innocence. Mehul Choksi, who is learned to have taken up Antiguan citizenship, has also tried to establish his innocence.
I sent an email to the Regional Passport Office, Mumbai, requesting them to revoke the suspension of my passport. However, I did not receive any reply from the Regional Passport Office. Further, the Regional Passport Office did not give any explanation as on why my passport has been suspended and how I was a security threat to the India. Hence, as my passport was suspended, there was no question of surrendering the same.
As things stand, the Modi government is trying to get back both Nirav Modi and Mehul Choksi to the Indian soil. And if any forward movement happens in both of these cases, this will strengthen the image of the Modi government just before the 2019 elections to be tough on white-collar crimes. So keep an eye on both of these cases, as a lot of action is expected in the early months of 2019. In Mumbai, Utkarsh Chaturvedi.
Well, with that, it's a wrap on this edition of India Business Hour. But before we leave, the Indian Space Research Organization has launched the GSAT-7A. It's a military communication satellite from Sriharikota in Andhra Pradesh. Now, this GSAT-7A is meant to enhance the existing communication capabilities of the Indian Air Force. We leave you with the visuals of the satellite launch. Good night.